Hello traders, Gary Wagner here, just after 11:30 in Honolulu, 5:30 in New York. It is Monday, 11th day of February, 2019, and this is the daily report for gold and silver. We have extreme dollar strength, which has really resulted in weakness across the board in the precious metals markets. Currently, we have gold trading off by about 0.5% at $1311.70. That puts it down about $6.80. But what I want you to realize is when we look at this net decline of minus 0.52% and compare that to recent dollar action, which has gained 0.45%, you can see that for the most part in futures, today's move lower was primarily, I would say 95% based upon dollar strength. It is even stronger than that in the spot market, in which traders actually bid gold higher today by about 70 cents, but dollar strength took it to a negative $5.70. We'll talk about that, of course, in detail as we pull up our technical studies. Silver also trading lower by about 11 cents and down 0.7%. So we do have selling in silver along with dollar strength. Platinum really taking it on the chin, breaking back below $800, $788.50, a decline of $14, 1.73%. And lastly, palladium down about 0.75% or a $10 decline at $1361.20. Now, when we look at the indices themselves, they were slightly higher on the day. The S&P, this is the E-mini, 2707. The NASDAQ composite, of course, that was up about 10 points, very, very minor change at 7308. And then lastly, the Dow Jones Industrial Average was down by 53 points today, closing at 25,053. So traders, as you know, as of Friday, I was really strongly considering entering the market from the long side on gold. That was based upon the action that we saw not only on Friday, but on Thursday, in which we had a decisive and fairly moderate recovery, but a recovery nonetheless, and the market closed well above 1312, and 1312 has been, to me, a very, very critical area in terms of support and resistance. The market today did close below that at 1311.60. And as we looked at it trading overseas yesterday, we could see that it began with moderate declines, which continued to mount and grow throughout the day and into the evening as it moved through Hong Kong, London, and then back into the United States. For that reason, we are still currently flat with no active trades, and we are very cognizant of the fact that the biggest factor right now that has been and is influencing pricing in the precious metals has been dollar strength or weakness. And we have seen extreme dollar strength at the same time that we have seen some real weakness in the gold market. Now, when we look at this action right here on January 31st, when we hit our high of the year, and that came in roughly at 1330. From there, we have seen gold have a steady and methodical decline, trading to a low of about 1306, and that was back on Thursday of last week before climbing up a little bit and then retracing today. And traders, I have just put up the Kitco Gold Index, and this, of course, is for spot gold. Spot gold currently at 1308.30. And that's with a net decline of $5.70 on the day. And what you can see when we look at this is that normal trading in gold actually bid it higher. In fact, it was the only precious metal to have positive gains on the day due to normal trading. But of course, all of that eroded when we accounted for dollar strength. And we can really see that when we pull up our dollar chart. In fact, let's go ahead and do that. And when we do that, what we can see is that back on the last day of January, January 31st, which is the day that gold hit the top, we also had the dollar really hit its lowest trading point from a small correction that really began mid-January And we have seen this market consistently have higher highs and higher lows. We have seen it consistently close above the open. We've got a total of 1, 2, 3, 4, 5, 6, 7, 8 consecutive green candles in a row. That is fairly rare. If you look at this daily chart here, you will see that that's the only time we can find this occurrence throughout the last 2, 3, or even 4 months. It has been extremely strong, and it is reacting to genuine uncertainties in the market. On the minds of many traders, of course, is the current trade war between the United States and China, and that has been a definitive bullish influence on the dollar. The other thing that we want to look at is the partial government shutdown, which occurred at the end of last year, carried in through, and as you can see in January, roughly at the same time as that bill was passed to fund the government for a 8-day period, we had dollar strength return. So although traders are highly focused upon the discussions going on currently between the United States and China, my sense is it is Friday's deadline that is really going to have the most profound impact on dollar strength or weakness. If they are able to come up with a solution and fund the government, we could see dollar strength continue or at least stabilize. However, if we go into the same scenario we saw recently in which both factions kind of dug in and nothing was gained, we could see the dollar come under tremendous pressure, moving back down to these lows. Realize that in the last couple of weeks, we have seen the dollar gain about 2% in value, and traders, that is significant. So traders, as we get closer and closer to Friday's deadline, I think we will have more of an indication of the potential outcome and if there is any headway being made. That is really going to determine our next move, because it is that, I believe, that will have the greatest influence on dollar strength or weakness, and dollar strength or weakness has certainly been the greatest factor influencing the price of gold. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.